Hi, Jeremy Peterson, broker with Vesta Real Estate in Ogden, Utah. It is January 2022 and it is time for another real estate market update. Today we're going to be talking about what happened in 2021, what made it such a wild and crazy year, and we're going to talk about where we're at currently and what we can expect moving forward for the year. So let's go ahead and do a quick recap on 2021. So first, I'm going to pull up our sales volume chart here. First, we'll notice that 2021 was a year for big declines in sales volume. This could be attributed to the fact that prices continued to increase and we did not see significant wage increases during this period of time. But take a look at December there, and we're going to come back and talk about this in a minute, but December saw a little bit of a sales volume increase from the same time last year. So that's unusual, and we're going to talk about that in just a minute. So let's take a look at our next chart, which is our price growth year over year. So 2021 started out with significant price growth. The rate of price growth was around 25% as we came into the new year. And then it peaked out at a blood vessel bursting 35%, and then swiftly started decelerating as we're heading here into 2022. And we're going to talk a little bit more about what's happening specifically right now that's a little different than this trend in a minute. So if we look at our inflation-adjusted house prices, you'll see that 2021 had a significant trajectory upwards. That was, again, was a continuation from 2020. And then about mid-year, that trajectory started to change. And a lot of that has to do with the fact that inflation, which really hasn't been much of a factor up until this past year, started to increase significantly, and that has impacted the real value of homes. And so the trajectory, even though it's still upwards, it's a little choppy and it's moving at a less aggressive rate upwards. If we look at our days on market chart, we'll see here that we actually started to see some semblance as 2021 ended, some semblance of a seasonal cycle as the days on market started to tick upwards from record lows and at least start to establish some kind of, at least some signs of a regular pattern moving forward. We'll see how the rest of this winter plays out in the next couple months. So let's cue our big picture affordability chart. And here you can see that we are still as high as we've been on the records for things being expensive. And certainly 2021 was a bad year for things to get more expensive, and our affordability is, or I should say our unaffordability is the worst that it's ever been on the books. Okay, so this is an interesting look at the market. Obviously, not all homes in the marketplace are the same. We don't have a marketplace with the same size of homes, same shape. We don't have a bunch of clones in the housing market. What we have is a broad variety of housing types and styles and sizes. And this chart kind of helps us tease out what's happening underneath the headline figures and what's happening in the different segments of house sizes and what price growth looks like in those. You can see for the micro houses, houses that are less than 1,000 square feet, those are those have gone to the moon. They just continue to accelerate. A lot of that has to do with the fact that that's just the entry point, the lowest entry point into the market. And so people are willing to pay a lot relative to the size of a home just to have a place to call home. If we look at our 1,000 to 2,000 square foot homes, that would be like a bread and butter house. Those homes accelerated the first part of the year and then kind of flattened out on a price per square foot basis as we got into the springtime. And then at our 2,000 to 3,000 square foot homes, that next tier upwards, those homes started to flatten out in the summertime. And then if we look at our 4,000 to 5,000 square foot homes, strangely, those homes for the first time in years have actually eclipsed their smaller the smaller tier at 2,000 to 3,000. It's actually gotten more expensive per square foot for those 4,000 to 5,000 square foot or 3,000 to 4,000 square foot homes. And one of the reasons that could be might be the land requirements that are needed to put that size of a home on a lot. Those lots might be proportionally larger than the 2,000 to 3,000 square foot homes, and therefore the cost that someone's going to pay per square foot for those homes might be more due to land costs. And so that's a consideration there. But it's an interesting look at the market to see what's happening under the hood and what parts of the market are increasing faster than others. So that's a recap for 2021. And now let's talk about what's going on right now in the market. And let's go back to our sales volume chart. And this is kind of a clue that something's changing in the marketplace. So all year we had decline in sales volume, like 20% on average. And that was a big deal. Obviously, buyers were being priced out of the market. And so fewer homes were selling at the higher prices. And then suddenly in December, we have this increase year over year in sales volume. Although it's small, it's certainly not a big decline like we saw going on all year. So what's going on with this? What could be causing this? There's two possible answers. There might be more, but I've identified two possible things happening. One is that interest rates are expected to increase. And so what's happening is buyers who are in the market, who are thinking of being in the market, are now jumping in all at once to get their place before interest rates increase. Most buyers purchase a home payment instead of a home. They take a look at their budget, what they can afford, and that's going to be dictated by interest rates. And that interest rate is scheduled to go up. We expect interest rates to jump from 3% right now to about 4% by the end of the year. The difference for a buyer, let's say you're purchasing a $500,000 home, you're under 3% interest rates, your house payment's going to be about $2,000. If you have 4% interest rates, that's going to be about $2,300. So a $300 bump in payments, if you're right there at the edge, and that's you need that payment to get the home you want, that's going to be a deal breaker for a lot of people. So that's pulling demand forward, I believe, and that's putting more people in the market right now in this wintertime market. The other factor that could be happening right now also is that wages are increasing. Inflation has kicked in and employers are trying to retain employees, and wages are going up. And so as wages increase, that brings more people into the market as well because they can afford more. And so that is something that's been happening recently in the last several months. And so we actually may have some more qualified buyers than we had earlier last year. So a couple things that are happening right now in the market. So what does this mean for sellers in the market? Right now, sellers are definitely in command. The demand for housing right now is enormous, and we're seeing bidding wars and auction house style price negotiations going on for people and agents, trying to put a home under contract. So for sellers, this means that there's a lot of goodies included in a lot of these negotiated contracts, and those might be things like non-refundable earnest money, appraisal gap, cash guarantees, leasebacks, free leasebacks, where the seller can stay in the home a month or two for free after closing. These are things that we're all seeing in contracts right now that are being successful in putting a home under contract. So if you're a seller and you want to talk more about these things and how to navigate this market to your best advantage, give me a call. I'm Jeremy Peterson, broker with Vesta Real Estate. Thanks for tuning in.